Hello and welcome to the PFS Wealth Management December 2017 Economic Update. On December 22 of last year, President Trump signed the Tax Cut and Jobs Act. We believe that the new bill is part of the reason that the stock market continues to move upwards. Here are some of the highlights of this new tax bill. For corporations, the top corporate tax bracket has been cut from 35% to 21%. This is the lowest corporate tax bracket since 1939. Another benefit of the new law is that it allows businesses to deduct the cost of depreciable assets over 1 year, instead of amortizing them over many years. This does not apply to structures such as buildings. It does apply to equipment that was newly purchased. For individuals, there will still be 7 income tax brackets. The percentages of tax to be paid at each bracket fall slightly, at least through 2025. In 2026, it appears that we will revert back to the current 2017 tax brackets. Next, the standard deduction doubles for both single taxpayers and married filing jointly taxpayers. This also reverts back to current levels in 2026. Personal exemptions are eliminated, and so are most itemized deductions. This includes moving expenses for everyone except the military, actually, and the deduction of alimony for those paying it. People receiving alimony can still deduct its receipt. The deduction of mortgage interest is limited to the first $750,000 of loans, and interest on home equity lines of credit can no longer be deducted. Taxpayers will now be able to deduct only up to $10,000 in state and local taxes. They must choose between deducting property taxes and income or sales taxes. The Act also repeals the Obamacare tax previously levied on folks without health insurance. This takes place beginning in 2019. The new Act increases the child tax credit from $1,000 to $2,000. Even parents who don't earn enough to pay taxes can claim the credit up to $1,400. The Act increases the income level from $110,000 to $400,000 for married tax filers to be able to claim this child tax credit. Another positive development is parents can now use 529 plans for tuition at private and religious kindergarten through grades 12. For the wealthiest taxpayers, the Act doubles the estate tax exemption up to $11.2 million for single tax filers in 2018 and over $22 million for married couples filing jointly. Obviously, this helps the wealthiest folks here in our country. The Tax Policy Center found that the highest 20% of income earners would earn the biggest tax savings of 2.9%. Other groups of taxpayers will benefit, but not nearly as much. According to reliable sources, the Act increases the deficit by $1 trillion over the next 10 years. This is according to the Joint Committee on Taxation. However, the U.S. Treasury reports that the bill would bring in $1.8 trillion of new revenue. The U.S. Treasury also projects economic growth of 2.9% per year on average, which is a healthy level of growth if sustainable. Finally, let's talk about what didn't happen. President Trump promised to end the alternative minimum tax for individuals. That did not happen. President Trump's 2016 proposal to allow up to $2,000 to be deposited tax-free into a dependent care savings account, that didn't happen. The president also promised to end the Affordable Care Act tax on investment income. That did not happen. Trump also promised to increase taxes on carried interest profits, not just increase requirements. That also did not happen. In the world of tax planning and knowing what you need to know, the PFS Wealth Management team will be sponsoring a series of tax planning and preparation workshops coming soon. These workshops will be led by a CPA on our team, either Larry Brown, Bob Koza, or Tony Madonia. We will have information going out to all of our clients on the dates and times of these upcoming tax planning workshops. So over the near term, visit our website or reach out to us and we will share with you dates, times, and details. Now for our mandatory verbal disclosure at the end of each of these economic updates. While we believe that the information in this report is accurate and reliable, we cannot guarantee its accuracy. Opinions expressed herein are subject to change without notice and are not intended as investment advice or the solicitation for the purchase or sale of any security. Please consult your financial professional here at PFS before making any investment decision. This is Les Goldstein signing off for your December 2017 Economic and Educational Update. Talk to you soon.